Curiosities and confusion, navigating the world of cryptocurrency. I'm delighted to be back with Sam again for episode 4 of the Uncharted Territory Podcast. We were discussing in advance of today's theme that there is so much to talk about. It's almost difficult to know where to start. We've both had such a big week that, you know, this is a genuine crypto cafe conversation. We're both caffeine fueled. I speak for myself actually, Sam, but I don't know if you're on the.
Well, I'm on the red bush.
I'm on the red bush. Yeah. So yeah.
I'm trying to wean myself slightly off the caffeine and get my adrenals recovered. But yeah, I might need one halfway through this.
Yes. But really, we want to kind of address some of the kind of key points of confusion around crypto because it's an emerging topic. You know, we've just started this podcast. A lot of people are now curious about this. And I found, Sam, that, you know, and I said to you that, you know, now starting this show, I feel like I have an obligation by the time we reach Friday, when we record these episodes, I need to have more knowledge than I did when I started.
And it comes down quick.
And it comes down quick. And I've taken a lot in this week, really trying to get my head around the current state of play with crypto as a market and as a tool, but within the kind of context of financial transformation, looking at its potential to disrupt the fiat monetary system, and assessing it on that basis, assessing it on a kind of investment possibility basis, recognizing its longer term potential, and also looking to kind of navigate some of the uncertainties around it. And I think one of the biggest barriers that I've come across, Sam, is some of the jargon. You know, people talk about tokenomics and, you know, and there's this idea that it's got a limited lifespan because it's a mode of exchange that is ultimately going to get wiped out by government. So there's all this like swamp of ideas and questions. And you know, we started this show to really start to navigate that. So why don't we begin by just taking a step back and go back to basics and define crypto chain in the context of blockchain and how they're similar but different? Why don't we start there?
I think it's key what you said, Dan, because it is vast. You know, and I think when people somebody will say to me, "What's happening in crypto, Sam?" Well, what does that question even mean? Yeah. You know, so often you go back to the baseline of the words is, you know, I think there's a real, and obviously, in the way it's presented, and a lot of people are new to it, it feels like, and especially that word cryptocurrency, it feels like, it's just a rebel currency. Okay, there's a shift towards complete rebel currencies, and that's where often people start, because in a sense, that's what Bitcoin, which is the founding father of this movement or this space, that's what Bitcoin is in essence, was an alternative to the financial system. Again, coming out of that 2008 scenario, a reaction against the banks, against kind of, you know, state intervention. You know, peer-to-peer transaction system on the blockchain. So understanding its roots are that, and that's why, you know, people would understandably have that view of that's what it is. But obviously we are now, how long are we, you know, 14 years on, it's grown into something completely different. And so almost when I talk about crypto, there is so many ways to interact with it, you know, at so many different levels. So I think it's interesting, Dan, when I turn up to talks or people haven't heard me before, almost, especially because I've got, you know, I run Crypto Cafe and I'm coming off to talk about crypto. People always often think, well, there's the crypto guy, so he's going to sell me. He's pushing crypto against this. Whereas I think people have heard me before. No, I'm not here lobbying for anything. You know, I'm here in an educating format to look at this and try and unpick it and try and demystify it for people, because there are so many ways to be involved with it, you know, and so many ways to view it or be interested about it, which is why the comparison really with the internet is an interesting one, Dan, because in essence, when we looked at Bitcoin was the kind of, you know, peer-to-peer electronic cash. Really, that was the iteration. Why Ethereum, which came out in sort of 2015, was such a paradigm shift? Was that really the tech people saying, what else can we build on top of this blockchain technology? Yes. So in essence, a lot of people coined that as the beginning of the next iteration of the internet. You know, this kind of Web 3.0 revolution. So much we have in crypto now is really about blockchain technology. And that's why I talk about this actually as the blockchain tech space, which is absolutely vast and goes so far beyond currencies, it's kind of unreal. And I absolutely take your point, and the sort of bit more you dive into it, the more things open up, But then what comes with that, in a sense, can be more confusion. But that's often the road to anything you research, is you get these kind of waves of clarity, and then it gets more complex, and you kind of open up and go back in. But, you know, at the gates of truth, I think it's the Buddhists say at the gates of truth are fear and confusion. And you need to go through those gates to try and, you know, get to the truth of the matter. So it is vast. And even when I talk about, you know, a crypto portfolio, my portfolio, you know, and a lot of people I work with, it covers so many different aspects. So you touched on there, Dan, it's almost like there is a decentralized means of exchange aspect. Yep. There is an investment aspect. There is a privacy aspect. And that's just within a sort of your own crypto portfolio. But in terms of the use cases of blockchain technology, I mean, it's absolutely vast. And that's where I think if you understand it or start looking into it, you understand it's a disruptive technology across almost all areas. Okay. And that's where when you really get to grips with that, you realize whatever you think about it, it's not a fad. It's not a fad and it's not a scam. It's a shift technologically. Now, how that eventually plays out is going to be a fascinating journey to watch. Who knows? But it's so much bigger than currencies. And I think it's more to say there are pure currencies in the crypto space, but they're kind of like the minority then.
Yeah.
The bigger iteration is almost think about them as applications. So in a sense, if I compare where we are in kind of the lifespan of blockchain, we're almost at that point where, you know, the internet was around 2006, 2007, which is really before we had apps. I mean, I think we're so used to it now. We're
that's right.
15 years under there. But it's interesting to agree with the generation, particularly people of, you know, our kind of age down. We remember before all this, and now we live after it. But equally, even for us, it's kind of hard to remember that the kind of proliferation of the iPhone and the App Store, and then, you know, apps on all the models like Android, that really began, you know, post 2008-9. You know, that was kind of the iteration of Web 2.0. So in a sense, if you think the internet, started email, we started to use it. I think I had my first email account in 97, 98 or something. You know, I remember getting it and thinking that I had to go back to the same internet cafe to get my emails, you know, the first time I signed up. But look how normalized that's become. But we still had maybe 10 years until we moved into kind of things like iPhones and the apps.
Yes.
Well, think about blockchain. If we sort of think we began in 2009, we're kind of 10, 11, 12 years on from that. And we're now heading towards the iteration of dapps coming. So dapps just meaning decentralized applications. So as apps really transformed our way of working and what was going on the internet, as will dapps in the blockchain iteration of the internet. So really, I would argue in the next 10 years, look what happened between 2008-9 to where we are today in terms of communication, in terms of apps, in terms of how the text, you know, we've used it and how it's transformed things. I'd argue that's going to happen in a blockchain sense in this next 10 years. So again, that's a big answer, Dan, but I hope that's kind of given a bigger, put more meat on the bones of, you know, when you just say crypto, people think about, you know, Bitcoin and cryptocurrencies. When you talk about blockchain, you're talking about an underlying tech, which really has use cases across almost every industry.
Yes.
You know, and almost every application. So it's absolutely vast. And much more interesting than people often think without diving into it. I know on my journey, the more I dived into it, the more interesting I found it. You know, especially somebody who's not come from a tech background, which is hopefully why I can try and relay some of these ideas. I'm not the kind of techie guy. I have mentors who are more techie, who I learn from, and I dive deep into them with them. But even from a layperson point of view, understand the application, it's really interesting. You know, and at its core, as we've said, the paradox is it's about decentralization at its core. But obviously in the tech has the ability for greater centralization and control. And so it's an interesting paradox within it. It leads to more transparency and solving a lot of fraud and issues, and can lead to more, you know, control and tracking. So it has, again, as I always say, it has both things in it. You know, it has the nettle that stings, and it also, you can go and pick that nettle and make a nice healing tea or nice nettle soup out of it. It has both qualities to it. So I hope that goes some way to giving a kind of, you know, or giving our audience a background to the sheer scale of it.
Yeah, you can even make nettle rum, which is something that we did during lockdown.
Oh, right.
During the first lockdown, we stayed on this amazing farm, which is my wife's family. We stayed there whilst we were waiting for our house to complete, and there's this abundance of nettles. We thought, what would happen if we made our own nettle rum? Anyway, that's a big tangent.
Well, I hope you're going to brew them up at camp out, Dan, because I'd love to have a nettle run with you. Continue the nettle analogy.
Yeah. So bringing us back on topic, what I found fascinating about this, first and foremost, looking at Bitcoin, as you kind of referred to that as the kind of instigating point to this entire technology. I think what's fascinating about this is that Bitcoin came with a manifesto, which beautifully set out how it wanted to disrupt the financial system. Yeah. But underpinning that manifesto was, quite frankly, some of the most groundbreaking technology that we've seen. Built. Actually, it wasn't an invention. It's built upon the kind of peer-to-peer history that was emerging from the earliest days of things like Napster and all of these different forms of distributed web-based technologies that have kind of quietly been growing in the background. But what's fascinating about its evolution from that point, and this is where I think it gets tricky, is Bitcoin did a great job of, through that manifesto, presenting an idea with a technology. However, almost everything that's followed has led with the technology. And this is where it becomes comparable to more of a traditional technological adoption cycle, because at the beginning, at the very outset, when there's a breakthrough in technology, you have the early adopters. But at that point, there are lots of barriers to its adoption, which can actually stem from the fact that those who create the technology are usually genius level in whether it's web programming or technological development, but they're not necessarily genius level in external communication around how to communicate its benefits, its use cases. So it's almost like you get this like tech revolution that starts with tech-minded people, and eventually it breaks through into kind of the more marketing-led or business-led populations, and they suddenly go, I think I understand this now. Is this what this is? And this can do that. And they go, aha. And it's when it breaks in it's very, very simplified explanation of how, technological innovations go from start to the next stage. But that's effectively what's happened. We've seen since Bitcoin, all of these things from Ethereum to many other things. And the barrier to me has been a lot of it is grounded in technology and technological jargon, which makes it difficult for the everyday person to understand it. But that's the same of any technological growth cycle. And that's where the confusion comes in, even for myself, who's consider myself to be relatively technologically savvy and aware. But you've just got this whole new world of jargon that accompanies it. So bringing it down to a simple understanding of, well, this is what this does and how it works is I think what is required to shine a light on kind of its use and possibility and growth in the future.
Yeah, and I think you've made a really valid point, Dan, that so much sort of jargon and tech stuff on top of it could almost be masking the ethos beneath it. So I think the people who've had fundamental shifts in terms of looking at Bitcoin early on or understanding it, and I really recommend people look at Andreas Antonopoulos' work. He does really good talks because he talked very early on about it. And when you understand the ethos and the energy, that's what's something really interesting about it. And I do know that, I've even got people who came to an event of mine recently, and he said something really beautiful, which was, getting into crypto and Bitcoin, aside from the crypto side of it, what it did was bring up questions about value and money.
Yes.
So I think that's what's interesting about the crypto journey is however you interact with it, if it can start a conversation, which is what I love, about value and money and looking at their old paradigms, how that works, that in itself has so much value, in itself, Dan, as an experience, because we haven't been taught, in our education system, I'd argue by design, about money and about value and about, the models that we've been sort of born into. And so even as a catalyst to bring up that conversation, whether you actually get involved with it directly yourself or not, is huge. And, this guy really, made that great point that that's what he's so excited about the journey, that actually this has made him think about money and value and how he relates to it. And so Bitcoin had so much in it. And you're absolutely right, Dan, getting to the ethos and the core, and there are really interesting concepts around Bitcoin of, they sound like lofty ideals, but you can understand where they've come from when you look at the origins and almost, like you said, leave behind that tech stuff and try and get to that directly. And obviously, happy to share resources. The Internet of Money by Andreas Antonopoulos is a book, but actually it's a collection of his early talks. And it's so accessible to people. And it's him talking back in sort of 14, 15, so an early pioneer. But it's great to get across it about what this technology could solve.
Yes.
And why there are people so passionate about it. They're not just passionate about it based on, a making money or investing or transacting. It really is about solving core issues. So getting to that ethos as a baseline, I think, is crucial, and then building from there and understanding the tech jargon afterwards, but not being lost in that without getting to that core.
Yes, although I will also add that, for those interested in technology, that element is also an exciting path to go down.
Totally.
But I think where things also get confusing, the term cryptocurrency itself, the fact it contains the word currency, and to be fair, even in my own analysis and research around this, it does leave me scratching my head thinking, okay, I think there's probably an argument for a better delineation of how we describe some of these emerging technologies, from crypto to blockchain to Web3, etc. Because you're right, Bitcoin, in its purest sense, was initially designed as a decentralized means of exchange or a medium exchange for financial transactions. And there are other cryptocurrencies that have that intention in mind. And, there are some really great examples which are designed for increased privacy and sovereignty over your ability to transact. And there's some really interesting explorations that we can go into there. That then raises the question of what are the government going to do? And we'll come to that, because I think that's another area which I've looked at, because again, it becomes a huge objection. Well, the government's just going to shut it down. And that then closes the door for people on this other world. But where it also gets confusing for me is that the technology behind cryptocurrencies have found other use cases beyond simply financial transactions, whether it's incentivizing or rewarding users for participating in a dApp or a decentralized app, or a decentralized network or activities, or whether it's content creation. You see things like Odyssey generating their own crypto coin to incentivize their users, whether it's data sharing or as a store of value, even like a traditional asset like gold. These different applications of a currency, you could still argue are means of exchange at the core, but the lines start to blur when it goes beyond our traditional understanding of a simple, pound coin. Not that you can get much for the pound coin these days, or a tenner, where we simply take a piece of paper or a digital representation of that paper, and we use it to purchase and pay for our goods and bills, etc. So I think the fact that its use cases have deviated beyond simply a mode of transaction has created that confusion. But similarly, I think there almost does, we talk about Web3 and blockchain, they're intrinsically linked, and the fact that, many of these blockchain, but not all blockchain projects, they typically use tokens or coins, which are effectively a derivative of a cryptocurrency in a way. So it's still using coins, which again are tradable. So I start to then look at that. Is that more like a traditional stock? And it also wouldn't be correct to make that direct comparison.
No, and I want to pick up on your word earlier, Dan, because you're absolutely right. Almost we've gone beyond just replacement currencies and almost talking about ecosystems.
Yes.
When you talk about tokenomics, what's so interesting if you dig into it, these are new models of transacting value. So almost the shift to Web3 is Web2 is the internet of information, and Web3 is the internet of value. Okay, so long has it been the goal of people, even prior to Bitcoin, looking for this e-cash thing. How do we send value across the internet? That's really what Bitcoin is answering that problem to. But what we're looking at with blockchain technology, a lot of it is advances on the digital tech we have already. Now, that's where I come to the example of, like, if you're totally against all digital tech, and you don't want to be on the internet, whatever, then absolutely you're not interested in that, how that evolves.
Yeah.
But if you're already using that, then this is an evolution of that. So I'll try and give a sort of tangible example, Dan, of improving kind of the models that maybe a lot of our listeners or people who are watching use, that actually can improve it, and it be more about Web3 is more about you being involved in the ecosystem and you benefiting as a genuine part of that equation. You always talk about Web 2.0 is about having your data, basically just taken and sold and used. Well, you're part of that equation. So in a ecosystem where you are accounted for, you have more control of your data, but you also can decide, well, I'm part of the ecosystem, therefore, like you gave example of Odyssey or whatever, you're part of that ecosystem, therefore part of the revenue, the value that said it can come to you. And I won't want to go deep into it because every ecosystem is built differently, but that's really important, that some of the tokenomics is about different ways of value moving and different kind of value models. So rather than just saying we have a currency and here's a different version of it, there are actually different ecosystems being created.
Yes.
And a lot of it is about efficiency. So imagine, Dan, you paid a subscription to some kind of streaming service. You want to sign up because it had lots of good content on it. And in the old model, you just paid one subscription. There are all these content creators on there, and maybe it gets divided up to them all equally. But in the future model with blockchain, what we can do and have smart contracts in there that actually the tech could say, well, your value of your subscription goes directly to the actual content that you used on that platform.
Yes.
So in a sense, the content creator go, well, rather than being lost and, I'm just getting a share, but actually I think I'm getting many more views and there's a lot more value. The value goes directly to you. So that's the power of these technologies, that actually it can really get value to people who deserve it, who have merited it, So it is much more direct and tangible in that sense, rather than kind of overall model where maybe before, the platform are deciding, well, we decide where the money goes and you don't know. So it's much more transparency and much more about your value getting to exactly where you want it to go. And part of the transparency of the blockchain is you can verify that. So this is the big shift in blockchain tech, is going beyond trust and not trusting, but actually verifying. That's the key shift to understand. I think somebody who did my course recently said that was a big shift, that for them realizing the power of it. That particularly when we were all fully aware, particularly in people probably a lot of people watching this podcast would know that we don't trust a lot of people in this world for good reason. That really what blockchain can bring in is actually being able to verify something rather than trust it.
Yes.
So even at the most simplest level, if I gave you £10, Dan, tomorrow, if you are not trustworthy, I think you are personally, if I didn't think you were, you could argue, well, you didn't give me a 10, you gave me a 5. And or if you forgot, I would say, well, I'm pretty sure I did, but now we've got this whole doubt going on. We've got this trust element, that's fine on small level. When you're dealing with big, what I'd argue are really kind of criminal organizations, you've got this trust level that's already been eroded. Well, how can we bring back accountability now? Through the blockchain, we can verify. So absolutely, we can go back and look, with the way it works, that absolutely that was verified, it arrived in your account, and there's no arguments about it. So there are so many elements like that. It does solve these kind of issues, and the trust versus verification issue is an important tenet of this technology.
Sorry, Sam. I think the problem the moment you go down the road of verification, though, digital verification, that's another pathway that raises alarm bells, because people see it intrinsically connected to digital identification and the kind of more centralized applications of that, where the governments will have a single point of truth about you. And I was involved in a wonderful debate in London hosted by Jeffrey Peel, and it really made those distinctions clear, which is incredibly important, because we get these generalizations, which again are things that then cause people to go, I'm not going to look at that because of this, but it's built on a fallacy or misunderstanding. So do you want to elaborate on that a little bit around that important concept?
Yeah, well, it is, because even as I say it, I see the two paradoxes there, Dan. Even when I'm talking about it, I'm aware of them and I read it, that it's almost like the immutable aspect is its power, and it's also the problem if it's used in the wrong way. So I'll give an example. There's, in terms of censorship, it's helped. There was a famous case of a girl in China who wanted to get out this, story about some abuse that was going on at a university, and she was being censored on all the Chinese platforms. They didn't want it to come out. It was about abuse in her university, and in the end, she put this letter on the Ethereum blockchain.
Wow.
Because it was immutable and uncensored, they couldn't censor it. So therefore, because of the metadata aspect, rather than just share a transaction, you can almost put anything on the Ethereum blockchain on top of it. People were able then to go and interact and read this material. So there's a great example of the immutable ledger being very powerful, because they can't then take that down. They can't go and undo that. So there's the power. And then on the other side of that, exactly what you're saying, Dan, is the problem of people feeling like, well, there's a permanent record of everything, and I don't want that. I want to be free. So it is really fascinating, these two sides of it. That's where I'd argue that, left unfettered and left in a kind of open source way, where I talk about permissionless blockchains, we could decide how much data we give up. That's the power of Web3.
Yes.
But rather than say it's about tracking and storing all our data, well, we are in control of our data, so we decide. So we only sign a certain thing, a transaction with our decentralized ID. Let's talk about decentralized IDs versus the centralized digital ID idea. Again, two absolutely diametrically opposed digital IDs in a sense. There is a sort of decentralized digital ID, which could just be your code, and it's very helpful for you, but it doesn't give up your data at all. You literally do control it, versus a centralized digital ID, from the top down state, that's about everything going on there and them using it as they wish. So these are the two differences. So absolutely, the problem is that within their system they're going to build, the distributed ledger technology within their permissioned walled gardens, it will be the antithesis of that. So you're absolutely right, Dan, that the tech has the ability, again, to do the two extremes. The yin yang exist in it, the diametrically opposed both exist and can be used. So that's why lumping it all into one argument of going, this technological advance is positive or negative. It's a technological advance, that can go either way.
Yes.
As with the internet, so maybe people are thinking anti, are you pro? You get that kind of thing. Are you pro or against it? Well, were you pro or against the internet? Or were you just curious? This is interesting. And again, I don't have an issue if you're anti the internet. It's not about you that you need to. I'm just curious and neutral. But if you like that, well, then you need to not use it at all, and go straight to nature. And that's the interesting argument of, we talked about the extremes of, do you decide to eschew all technology, or do you try and understand and use it? And that's a really interesting philosophical debate, and how realistic is it for you? And so all those things, which is why this conversation always expands, Dan,
yes.
We can bring it back in. But I have to hold all those different perspectives at one to have a holistic viewpoint.
Yeah, it's such a big, and it is the philosophy around the conversation is actually such an important one.
Yeah.
And if you bring AI into that mix and look at that, there's an organization now called the Institute of Life, or Institute for the Future of Life, who have called for a break in the development of AI because it's already growing out of control. And it's with. This brings up a bigger question, because with our technological innovation, there are lots of things we can do to innovate in the world, but it doesn't mean that we necessarily should, because, again, the patterns of human behavior are often hardwired into the use of the technology. And you could say something like social media is a piece of technology that by itself, until there's users on it, it's neutral. The moment there's users on it, it changes, but also the developers' intents, because the fact that, Facebook prioritizes the development of its product in order to make you can stay longer on the platform, consume more content in order that they can serve up more advertisements. You can have that discussion around anything. So I think it's important to recognize with any technological development, there should be an ethical conversation. And in fact, now, it's not just an ethical conversation, it's an existential conversation, particularly when you look at things like AI, but that's a bit of a drift from our current conversation. But
that's another episode.
There is, but it is important to have that philosophical end in mind around the growth of a technology. And a lot of, again, I think we touched on it in the last episode, what can happen is when we become intimidated by a new technology, it tends to make us withdraw from it rather than embrace it with our curiosities to explore how it could benefit us. But I also revert back to the part you made about the iPhone and how that brought this new app ecosystem. I literally remember, as you mentioned, I could see it in my mind. I was on a stag do in maybe 2007, 2008. And my friend's brother had an iPhone 3, I think it was at the time. It may have been an iPhone 2. And it was the first time I'd seen an iPhone. And I was like, what is that? Like this thin, like really slick looking device. And he said, here, take a look. And all these apps, and it's like very in its infancy compared to now. Yeah. And I think I had my Nokia 3310 or something at the time, which was like a brick comparatively. And it's like, whoa. But instantly, as soon as I saw it, I saw a world of opportunity. I saw how that was going to, like, it was almost, like, it was like, whew, you know, I considered my ability to see patterns and how things interact with one of my strengths. And I saw that and I was like, right, this is absolutely the future of where
it's ubiquitous. You know?
And now it's ubiquitous. And the same will likely happen. And that evolutionary leap from, you know, I'm not, no criticism of Nokia, but the earlier iterations of mobile technologies into that kind of epoch shift in terms of user experience and ease of use will happen within these decentralized apps that are powered by this kind of tokenomics that you've talked about. Yeah. And when we use terms like decentralized, even decentralized apps, you think, well, what's the difference between an app and a decentralized app, and tokenomics? What does that really mean? And you've given a really good example. And I think the beautiful example I think of is how this could really apply in a linear fashion is that you got the like Pirate Bay and these other like Napster music sharing things came along, disrupted the financial industry to try and take out the middleman to liberate music for people. But in the same stretch, even Spotify to a large extent wiped out the creators of the music, you know, like the people actually who should be rewarded. Well, what blockchain offers is now you create a song, Sam, you put it into the decentralized blockchain, like you can, the evolution of that song and its use can be measured for its entirety. So you get, as you mentioned, get the proper rewards.
Well, I'm glad you brought that up because a big part of it is proof of ownership. You know, so often I like to demystify this idea of NFTs. So people understandably associate NFTs as a JPEG of a kitten that got sold for, you know, 150,000. But, you know, that is the iteration within this early bubble, speculative bubble. But of course it dominates and it is the kind of crazy news story. So understandably, when you haven't dug beneath the surface, you go, that's just ridiculous. You know, I'm about real stuff and these people are talking about, you know, digital art going for, you know, hundreds of thousands of dollars. Whereas really, and let's just look at NFTs. An NFT, all it is in simple terms, is a unique token. Mm-hmm. So when we talk about fungible tokens, okay, that just means like a Bitcoin or a pound. We swap pounds, it doesn't matter which one we've got. They're all the same. They have the same, you know, qualities to them. They're interchangeable.
Yep.
We need to demystify and again, the language is really complex. You talk about non-fungible tokens, people's heads start steaming, and it literally means a unique thing.
Yes.
Okay? So exactly that, Dan. If you create a song or, you know, anything, you know, because it's unique, you then make that into a token, which is in a sense it's just a digital contract. Think of them as deeds.
Yes.
You know, it's proof of ownership. It isn't the thing itself; it's just proof of ownership. And therefore, what's great is from a verification point of view, you can prove you own that.
Yep.
And then, the rights to whatever value can come to you. And obviously, it's interesting from an art point of view. You know, I've spoken to artists who, you know, traditional artists who are keen to look at this as a model because this is, again, the trust versus verification. In that old model, you know, the dealer can be selling their artwork on without telling them that there are royalties owed to them. Whereas if you've got it tokenized form and you can actually track the provenance of a piece of artwork and also its lifespan. Even if you never see it again yourself, you track its lifespan, and you can even have a smart contract built that say you've built into the essence of it at the core at the beginning that every time it's sold between two parties, 10% goes to you as the creator. Well, you could have no idea who those people are, and it could be 15 years down the line, but that contract will be triggered. And your dues will come to you directly. You haven't got to phone up an art agent who might be done a runner or, you know, done a deal. So that's a really interesting thing of you know, deeds and ownership. And I think you alluded to it in one of our earlier chats, Dan, that all these different you know, industries, actually blockchain will come into them because they are proof of ownership, they're contracts, they're deeds, it's lawyers, estate agents. People are already trading houses as NFTs.
Yes.
And it doesn't mean anything crazy digital, it just means that the contract, you know, a house is a unique token, therefore it's becoming an NFT and it's trading that way. So there is so many, you know, almost like the future is tokenization, whether you like it or not. That's, you know, that's just me looking at what things, again, everyone's talking about it. It is a form of putting things in a more easily tradable way.
Yes.
You know? And like you said, you touched upon tangible assets being tokenized. So, I have tangible assets that are tokenized. I have gold and silver tokenized. And in a sense, what that means is I have proof of ownership without actually having to have the actual metals. Okay, so I am removing them, but equally, I can trade in and out of that very easily. So I can trade out those tokens into another token. I could trade those into pounds or into dollars. So it's a more liquid form of trading in metals because it's both. So that's huge. I actually, involved in a tokenized, small copper mining operation, which is really about busting the big, big mining gigs that often don't do things, in a very responsible way. And so this is a much more about ownership and also people being able to own at much smaller levels, Dan. That's the democratic side of this. I'm going on loads of tangents because it's so big, but they all pop into my mind, is that in the blockchain model, because of the reduction of costs and the barriers to entry are much lower, it means that, say, somebody in a developing country could invest in the own copper mine they're working in, and say, I want to have a stake in that. And with these models, you actually can.
Yes.
Whereas in the old model, it's about, well, I've got to go via a broker and I've got to buy shares. There'd be a minimum. And I think, that is the danger, that's where the powers that be want to move things towards, which is keeping the barriers to entry, always arguing that's your own safety. But left unfettered is about everybody being banked to whatever level they want, based on their own, their own decisions, their own level of involvement or not. So again, another long answer, but there's so many strands that come to me, Dan. So yeah, maybe you pick up the flow and.
Yeah, I will, and I'll draw it back to kind of our original starting point. But the artwork one example is really powerful in many ways as well, because the reality is that by having almost that digital signature and that and NFT in the way you've described, if they're therefore ends up being fakes, let's say you were using a token to align to a purchase of a specific piece of physical art, and of course we know that there's lots of fakes of some of the historic artwork. Well, now, if you've got the token associated with a particular product, then that can exist with it as long term. Now, of course, it's much easier with digital assets because they're woven into it, but there are things you can do to, give unique identifiers to a piece of artwork that is unique to that art, and that then kind of cuts out that whole element of fraud.
Yeah.
Now, where things get, if you think about the nature of our conversation so far, we start with this kind of curiosities and confusions around cryptocurrencies and the kind of that perception that cryptocurrency is purely a means of transaction. And now we're talking about exchange of artwork. And actually, I could, because in preparation for this, I riffed off a whole load of applications of how blockchain-based technologies can be applied. And I'll just list a few of them because it helps you to understand how these things work. But let's say in education, for instance, if you've gone to university, you've got your degree certificate, you can literally fake a degree certificate. I know someone that faked a degree certificate to get a job in a very high-profile company and got away with it and has never been found out. And, now blockchain, you can create secure, tamper-proof storage of academic records so that, it makes it easier then for students to access and share their records across institutions. It's a use case I would have never thought of.
Yeah.
Healthcare, securely storing your medical records. And what I loved about what you said, you can protect your patient privacy. So I actually love the idea of having full control over my medical records and actually being able to, on an app, say who can and cannot have access to that.
Well, Dan, I want to jump in because you've nailed it almost before I forget, because I'm tired this morning, that the control aspect is everything.
Yes.
So if you're so if our relationship is, if we're in control of it, this tech is incredible. But it's always that issue, isn't it? If it's top down control versus our control and our relationship. So used in the right way with our control, incredible use cases that you decide proactively that they're going to be a benefit for you, and so that's a great advance. But it's not. It's the issue is the top-down imposition of some of these things, as in you can't be part of society unless you do this, do that, do that. So that's where the big difference is, isn't it? You're absolutely right. It's who's in control.
It is, but also, if we wanted full privacy of our records in that way, that's powerful. But also with cryptography and encryption, if we wanted then to contribute our data to a wider data set, let's say, because there is an advantage for medical data being shared in order to develop solutions to medical problems. But you don't want that to be necessarily individualized to you. You know, our medical records are private. So having the choice, in the same way you have a choice if you want to donate your organs at the point of death, you know, you could choose whether you share your medical data in an anonymized fashion for the sake of medical innovation, if you wished. But that choice then comes back to you. And I love the idea. I think about how many companies in the world have my email address because I've given it to them. How many of them have it because it's been part of some, you know, just fraudulent leak of emails, and now it's just spread out on the web somewhere. The ability then to have that completely tracked at the point of my phone and say, no, all of you companies can no longer access my records. And if you do access my records, I can say you can have my name and my address or whatever. Having that full control. Now,
Dan, well, you've summed up Web3. I mean, the ethos of Web3, which is I think it's important to understand this. So, with a kind of Web3 decentralized identity, we're not talking about it being your name and your login. It literally is talk about a private key, you know, like an identity, like you have for your crypto wallets. A private key, you can put whatever data you want on there, and it actually can make it easier because exactly what you said. The old model is you go on a site. You've got to give them your email and they hold it and whatever. Whereas this is you can sign in with your private key, access everything because you've got the right, you know, codes or you've given permissions, and then but still withhold what information you want. So I don't want to get too technical about it, but it is that difference.
Yes.
It is the fact that you could have a key that you can actually, and it also there's efficiency, move across all these different platforms you use. The data that it needs is all there stored rather than starting it up every time, inputting it all. But you are actually in control of it, and you're not. What's interesting is you have to sign that transaction. It's like when you go on a Web3 website with your wallet to do some transacting in won't get too kind of in decentralized finance. You have to sign the agreement that you are going to make transactions. That's part of your private key. Same with your private, you know, decentralized identification. You actually sign and agree, you know, that you are going to do a certain transaction. So the power is with you. And you're absolutely right. You're choosing your level of data exposure or not. And I think that's what's so powerful about it. So that's a huge shift, you know, what's going on the internet. Look into Web3. It's really interesting. I always say to people, even just start looking into what Web3 is. That's a good way to try and understand this shift.
Yeah, and you know, you cut out many intermediaries. You cut out the powers that be. Which is a thread I want to expand. There's a countless threads I want to bring, but to bring this back to the origin of the conversation before I have another part of conversation which could blow this whole thing up. Just completely railroad the conversation. Yeah, chuck a bomb in there. But to bring it right back to that initial point of cryptocurrency, and my point that, you know, its original kind of preconception or conception, not preconception, it's conception with Bitcoin. As a financial tool of transaction, as a financial medium of transaction. The fact that it's got these other use cases around store of value and network access and content, that started to blur the lines. But as I said, it's still within the kind of, you know, if you're paying to access a community, it's still a mode of exchange in a way. And you could still describe those activities. And where I think there is a need for greater clarity to help people make these distinctions is to delineate between a cryptocurrency being, you know, and this is, I don't have any authority over this, but I would say to put it out into the conversational world within the communities is that it would make it much easier for people to understand if we actually were to use the term cryptocurrency to quite significantly represent that use case of mode of exchange, and then have, you know, because when we're talking, what we've just been talking about, and I know it's not simple because of everything we've just talked about at the same time, but when we talk about everything we've just talked about, you know, we've gone from talking about using Bitcoin to purchase products. That's something people can understand. You know, there's Bitcoin cash machines. Even down in Cornwall, I was in a pub down in Cornwall during the
Bitcoin near to Cornwall, Dan. That's huge.
It has. Yeah, there was a Bitcoin cash machine in the, in the pub. I was like, wow. And they accept Bitcoin to buy your drinks. So people can understand that as a mode of exchange. Yep. That obviously opens up a whole loop of conversation around, well, it's going to get shut down. We'll come to that in a minute. It's important that we come to that.
Absolutely.
But we can understand that when we talk about cryptocurrency, which is what most people's understanding are of the entire ecosystem that you've just outlined, because, you know, we only gave a few examples: art, education, but you've got entertainment, media, sport, hospitality, travel, leisure. You know, when you start to look at
lines, voting forms, governance, DAOs, decentralized autonomous organizations, a whole new way of working. So yeah, that's why we're not going deep into all of it, but it's just suffice to say it's vast.
It's vast, but so that is why it's so much bigger than currencies. It's so much bigger than a mode of exchange. So if your ability to start looking at this as a subject is shut down on the basis that you think that something like Bitcoin will ultimately get stopped through the regulators or through law from becoming a transactional tool, or any other form of cryptocurrency that's designed for financial exchange, and you might be right, quite frankly, but we'll explore that in a moment. But if you discount then everything we've just talked about, which is essentially going to disrupt almost every industry, because it's going to make so many efficiency gains across so many applications. It's going to make everything more secure, more private, more effective, more efficient using these new technologies. And over time, it's almost like rip and replace. It's replacing what's already existing and replacing it with a more effective technology, as we've seen before us. This isn't the first time that, you know, when digital, the web came up, you know, the ability to go on something like Wikipedia, what you think about Wikipedia or not, or on online encyclopedia. You know, the web has basically become an encyclopedia of everything.
Yeah, the Library of Alexandria, you know, online access. Online.
But previously we had to go to the libraries, we had the books, and, you know, now it's democratized our access to education and knowledge. And now that, again, philosophy-wise, we could debate what negative aspects it's also created amongst the positive. Totally. We're not discounting that by pointing to the benefits of something. It doesn't mean we're ignoring the harms. And the same is true of this conversation. But to bring it right back, I think it's so important to recognize the wider scope of what's happening here, particularly with the context of blockchain, Web3, and everything that's emerged, because it is intrinsically connected by virtue of this kind of tokenomics model, which perhaps we need to explain that a bit more, Sam, because people hear about things like initial coin offerings and a lot of and not every blockchain project uses actually ICOs or which is initial coin offering, or even crypto models of actually bringing their projects to life. But it's commonplace. It's kind of the de facto at the moment.
Yeah, they're all so unique that, I mean, I sometimes have people new to it and I'm working with, and understand they look down the list of cryptos on you know, maybe CoinMarketCap or CoinGecko, the two main sites, and they'll always go, well, that one's cheaper than that one, or that. And I always say they're all completely unique.
Yes,
they're different, so you can't price them in that way. You're trying to compare two separate things rather than like, I want that one, it's cheap. So, you know, they absolutely are all unique in their tokenomics and how they function. So you're absolutely right. It is just going beyond. It's going far beyond currencies, and that's why, you know, when I try and talk about digital assets, that's why I call the course Navigating Digital Assets, because we're looking at an asset class and almost a tech space. You know, the sort of tech space of the future. You know, it's why people look at the whole crypto market, even if we look at it from investment terms, just view it as a kind of new extension of the NASDAQ. I mean, it's kind of like a new, you know, extension of that tech sector, you know, and it's nascent, i.e. it's, you know, coming into being, it's in its early forms. So yeah, it's important to understand that almost every project has its own tokenomics, its own supply and how it came to be. And then you get into proof of work and proof of stake. But I say all these things and I can feel that I know the audience will go, this is all too much. And I understand that.
I can feel it as well. Yeah, I'm feeling it myself. Yeah.
But I know that by shrinking down each bit and going on that journey, you will get lots of clarity. You know, you will. And it's almost like anything in this movement. Don't try and think I've got to get somewhere really quickly and let that be a barrier to you saying I'm not going to go there at all. Just by going on the journey, you'll start to shine. You don't need to. Just understanding little bits by stage will get you there. And also because it is a profound shift that is happening under the bonnet, whether you realize it or not. And yes. I think that's always an interesting point, Dan, that we've talked about loads, that there are people using crypto and they don't even know it, using blockchain technology. So that's already happening. And I think people have this idea of, well, how are we all going to get to crypto? You know, crypto's so confusing. How is it going to spread everywhere? Well, you won't know. You know, it'll be under the bonnet. And I think talking about shifts that happen, I mean, I know Antonopoulos speaks about this very well, that think about the telephone shift, Dan. When we had our, you know, the earlier days of the internet, we had to push that through our phone line, didn't we? So we had our dial-up, spending hours for it to dial up and make those noises. Yeah. But what happens is a flipping point where the internet was coming through the phone, and then at a certain point, everything flips, and now the phone comes through the internet. So same thing now. There's a time where it runs on side by side, then it runs through it, then side by side, and actually the flipping happens where actually now everything's happening on top of the other tech. So that's what's going to happen with blockchain. Right? Yes. It might be side by side at the moment, or then it's being squeezed through the current iteration of the internet, but essentially it will flip and everything will be run on top of the blockchain. Yes. Almost everything. So that's the kind of natural shift in these technological advances.
Yeah, I do appreciate, and I know that, even as we go through this conversation, because this conversation has been layered, we've woven so much into this conversation. I can see how, when we start even the term tokenomics, we probably need to do an entire episode on just that subject, or within the financial reset program, but just to make that really clear, because what it also leans into, which is an area which I've been scratching my head with, and this isn't the bomb that I was going to drop in that blows the whole conversation up. I might come back to that as well, because it's, I just don't know if we're ready for it.
Give you pre-warning, or that's just going to come in out of nowhere? I hope it just comes
boom. Yeah, no, it's a really important conversation in terms of the dynamic of how the decentralized models work. It just when I first discovered it blew my mind, and it may do for others as well. But this conversation might blow people's minds. It probably already has for some people who are just looking at this for the first time. But if you're at this point in our dialogue, what I personally want you to recognize is that the conversation around crypto and blockchain it's beyond the mode of transaction. So if you go away with anything from this episode, make sure you take that message that this is much bigger than what we imagine to be like pounds and pence and exchanging.
Yeah, not a digital version of it, or just that. And I think I just want to say tokenomics quickly, almost demystify it. Just think about the tokenomics of your fiat currency. Well, it's got unlimited supply, whereas Bitcoin's got a fixed, scarce supply. Those are tokenomics in themselves. You don't have to go, tokenomics can be simple and they can get more complex in how they work. But it's base level. Let's look at a finite supply versus an infinite supply. So that's why, things with finite supplies hold value and can increase value. Things with infinite supply that goes on forever are endlessly devalued. Hence why your fiat currency is down 99% from where it was in 1971, almost regardless of which one you've got, because of its endlessly expanding supply. So without going deeper, tokenomics covers just that.
Yeah. Now, to bring it back to the point of how we have these new technologies and their practical applications, because it's so web-based, and you look at these names on a chart, almost like you mentioned, you've got all these different coins, you lose sight of the fact behind that you've got development teams, you've got company founders, you've got funding, you've got operations. You've effectively got an entity behind many of these projects, or most of the projects, all of them. And where I got to then, because I really started to compare, the kind of coin markets to a stock market, and as I mentioned, it's not strictly, you can't make it a strict comparison, because one is highly regulated. There's lots of different protocols in place. This ICO market is not regulated, and it doesn't, but it does kind of work in the same way in the sense that the popularity of a coin based upon its various factors. But long term, you would imagine that the coins that are most stable and offer greatest growth potential will be the ones associated with projects that have deep utility. Just imagine like in prior to the .com era, the early stages of Apple or Amazon, their stock price would have been low, but it grew and grew and grew because it has utility in a way. And again, we're not here to discuss the checklist of whether we should be using Amazon in the world in order to provide our freedom, to safeguard our freedoms. It's more to give a widely acknowledgeable example of a company that's gone from very small to a monolith. And if you had invested in the early stages of those companies, the lifetime of the life cycle of those companies would have produced amazing returns.
Yeah, the reason Amazon's quite a good analogy is because although it's not blockchain, it is a network.
Yes,
and blockchains are networks. So part of the growth of Amazon is because it is network based, So and cryptos and their projects, they are networks. They are intrinsically networks. So that's also why, because of network effects and the way networks expand, that's why their growth can be so huge. Because once you get more users and nodes, it's you get that network effect, which really can create such huge growth. That's how Facebook and Instagram, once they start tipping, how big does that growth get? It's extraordinary.
Yeah. So I suppose actually where I'm about to go is a mind opening / confusing point, because when you start thinking about there being teams and offices and operations behind a lot of these projects, and traditional investment going into VC funds going into these projects to help them grow, you might start. We talk about, say, how an NFT type product could be used as a contract, as a digital contract, to represent a deed of a property sale. You can understand a digitization of a deed; it makes sense. But when you start to go down the road of it makes sense in terms of utility. But when you think about then, if you're investing in a particular blockchain project, my head starts to explore it from a traditional investment point of view, thinking, who's the team? What's their business model? What's their probability of success over the long term? And that's where I hit a roadblock. I'm like, how do I can assess the utility. I know what the project's intending to do. And for most of these blockchain-based projects, they've got their website. You can go and look at, they won't necessarily have a manifesto, but they'll outline what they're attempting to do, their history, their investors, their partners, like a traditional company. You can access all that information. But if I look at it from an investment mindset, that's where I go down. I get stuck because it's so, you think about profitability, because a lot of the companies that failed during the .com era were just hype and air because they were jumping on the growth curve, which is happening with blockchain and Web3. That is absolutely happening. But over the lifetime, you could start to see that those with utility and a business model were the ones that would prosper because they had a chance of sustaining beyond that initial bubble.
Absolutely.
I can't get my head around this in the context. I just keep hitting a brick wall. I'm like, it's like there's a block in my mind. I can't get my head around how to assess the viability of a project beyond its initial utility.
Yeah, and I think it's a really important conversation, Dan, because I would argue that as what happened in the .com bubble, 90% of what exists today in crypto will disappear.
Yeah,
it won't make it, and there's two facets to that. There's a natural, and from your entrepreneurial background, that 90% of startups fail regardless. That's the kind of figures we have. And then we also look into, it does tie into state intervention with regulation and control, who will not be allowed to make it, who will be, gone after, who are the chosen ones, who are the ones who are going to make it irrespective. I'd argue it's not a level playing field. I give the example of should you and I come up with the best blockchain idea in the world, doesn't mean that we're going to make it, because we're not the right contacted people, so there's always that kind of element I have to bring in, in the holistic view. So you're absolutely right, Dan, utility, and we're looking at investment point of view. Utility is everything, because you're absolutely right. Currencies, even they can be really popular but they can lose, all it takes is them to somebody to lose faith in them.
Yeah.
And they're gone. So which can happen to any currency. That's how currencies fall and die. People lose faith, and that can also be manipulated to lose faith in them. Because you have to think of, do they need? I always ask this question: does it need to exist? For the future tech world that's being built, again, for good, bad, and ugly, does that need to exist? And this is what's really interesting about Bitcoin. I really support Bitcoin. I think Bitcoin's amazing and it's about that. But this harsh question can be to Bitcoin viewers: does it need to exist? No. I mean, I think it's great that it does exist, and I hope it does continue to flourish and exist for all the decentralized, freedom reasons. But that harsh question, you look at it: does it need to? No. The world can go on without Bitcoin. The building of that new tech world can go on. A lot of the real utility projects, their use case absolutely need for the tech to function in the future. So often I look at, the real things that flourished from the internet age were the things that looking at interoperability, almost kind of boring tech solutions that They understand this is the future. So you need solutions to make it all function. Like Intel Inside or Cisco systems that are really the kind of interoperability layers in this new tech model. So there are a huge amount of projects who are working on those solutions. And I think, and a lot of them, we talked about ISO 20022, Dan. A lot of the top blockchain projects, these big, and these are well-established companies already. So I always say they're going to have huge growth, but they're already multi-billion-pound companies. But the fact is that a lot of them will go on to be trillion plus companies. A number of them, you can even go and look, are ISO 20022 compliant. They're already working to be functioning as part of this new financial landscape. So there's a good sign of, who are solid, in terms of they've got a future, they're working with all those things, they've got that in mind. But again, it doesn't mean also that there won't be really into small startups that make it as well. Yes. But that's a much harder thing to pick because we're so early. But what's interesting, you talk about venture capitalists, what's so interesting about this crypto space from an investment point of view, we're in a kind of unique time in history. Because if you look at how traditionally in the kind of equity market stocks, venture capitalists work, often they are the big people with a lot of money. They're picking up these small companies. They've got the inside info. They're watching them. They'll invest. Once they've grown maybe 1,000 times in size, the venture capitalists then dump that stock. Then it goes public. They then dump that stock in the stock market, and then the retail investor is allowed to come in and participate. But essentially, the huge growth has happened. It doesn't mean that the investor then might not make 20% a year or, make some all right returns. But the absolute life-changing growth has happened already. So the VCs, they're out. They've dumped their stock on you, and they're out. What's interesting about crypto as we stand now is that even somebody with 50 quid can be a venture capitalist in this blockchain emerging space, and they can get in right now, and that's probably going to shift. But as we speak today, they can get in at whatever level they want. And interestingly, before the real big regulation move comes in, they're actually front-running a lot of the bigger venture capitalists, because there's a lot of venture capital money waiting to come to this market, huge money, and they can't come until it's regulated because they're not compliant to do that, not allowed to put as much money. They are in there at some level. So that's a kind of really interesting window that we're in, which I'd argue will be a temporary window. They're looking to close that window. But we're in a kind of unique time in history where that's possible, so that you can come in at the kind of grassroots and have a stake in these networks really early on at whatever level you want, whether it's, £20 or £1,000 or £10,000. That's the kind of democratic, kind of position we're in right now, which may well shift in the future.
Yeah, and I think what's interesting about that is, in the conversation around regulation, law, the authorities and powers that be shutting all this down, the reality is for the last decade or so, this industry has grown unregulated, and it's still at this point you can use the various different cryptocurrencies, whether it's Bitcoin or Monero or Litecoin or whatever coin, we don't need to go into the specifics of each coin, but these can right now be used for transactions, that for those companies and networks and projects that accept cryptocurrencies, you can pay for things. You absolutely can right now. Now that could all change. But again, we have to look at regulation with a nuanced mind, because the cost of that independence that we currently have is greater risk, greater volatility, greater instability. And, what will ultimately lead to greater stability in the markets will be increased mainstream adoption, clearer regulation, greater liquidity, which will come when the risks are, mitigated. So I would suggest that regulation is almost an inevitability.
Oh, it is, yeah.
But when we talk about these greater and wider applications, the reality is, because if you look at something like Bitcoin and its ability to track, because whilst I agree with your point that we don't need Bitcoin, I think some would argue that we do strongly to disrupt the kind of centralized.
Oh, we do.
I know you do. I know you do. But in terms of someone saying, like, is it a human? It's not a human. And if we go down the human need route, we have to ask, what the heck are we doing? Like with all this technology, what's it all for? Like we've lost sight of like, what do we need to live a good life? That's why in this conversation, there's lots of people kind of dancing between, I want to understand it and explore it versus actually want a simpler life. And whatever path you choose, that's okay. We always come back to this. It's about sovereignty and choice.
Yeah, and the journey, and the journey in that I sometimes, I'm not sort of researching this space or into it because I want to be glued to a screen for the rest of my life. I always, I think people can have that. That's why I think, people can have that kind of idea. Sometimes even on Q&As, people just assume I'm all in crypto and I'm all about crypto, and I'm not at all. And I always give example. I'd love to be part of my involvement is understanding. So perhaps I can increase that side of my life down the line. But I guess it's like a journey rather than thinking I can get there straight away.
Yeah, and also like any investment or creative project, what it ultimately leads to, and a lot of people's impetus for pursuing something like that is actually to get greater time freedom because you have the financial resources to do so. And again, I know there's a whole ethical philosophical conversation, or that's a whole episode. What would constitute a fairer world? But again, baked into the principles of these technologies is a more equitable, fair system, and the potential for which. But I understand all of the skepticism around it because, we've also talked about how regulation is legalizing corruption, which, so, there is every possibility because the Bitcoin is a threat to the fiat currency system, but the fiat currency system, I think, is showing the signs of collapse. But the powers that be aren't going to willingly allow that control to go from their hands into the people. That kind of utopian ideal that the system will collapse and all will be fair and just in the world. But what we can see with the kind of blockchain world, the fact that the VC, venture capitalists, angel investors, mainstream investors are now plowing funds into blockchain-based projects, Web3, we can quite categorically see that that evolution of the technology is not going to get shut down by regulation. Yeah. Aspects of it might, for sure, but this is, again, the important point. If you're shutting down the conversation around this whole entire world of digital assets, crypto, blockchain, on the basis that Bitcoin might get regulated or other transactional coins might get regulated, you're missing the whole point because this ecosystem, as Sam referred it to, is growing right now, and the opportunities are vast, but as are the risks, for the reasons we've talked about. So,
but I go back to the ban. Obviously, China has banned Bitcoin about 10 times. On its way from 0.8% to $69,000. And so the idea, again, I think that defeatist idea of they're all powerful. They're not all powerful.
No.
And actually they're in the motion of trying to control. And as I always go back to, most of it is about corralling behavior and manipulating behavior. And they know they can do that with a huge majority of the population today. Hopefully there's more and more who are freeing themselves from that manipulation. That's the path, and that will only grow. That's my point, that, as much as we might be a small minority, we're only growing. No one's coming this side and then going back. This side of the equation is growing and will continue to grow. So to have that defeatist view of, well, there's no point in anything, and you said it last time, Dan, well, what would be the point? They want you to think they're all powerful as well, because they want you all to give up. So I go back to the example of, talk about the word just banning and regulating. We got banned from meeting up, Dan.
Yes.
Now, in the time that we got banned from meeting up, I had the best meetups I've had in the 44 years of my life.
Yes.
No question about it. Right. So just showed that human spirit, human endeavor, and human. If you're on a creative path, what does that do? It's a catalyst for greater solutions. So equally, I've found incredible contacts because I was, officially banned from finding good contacts or meeting them. Actually, what did it do? It flourished a greater connection to people and what's important and the right to conversation. So the idea that legislation can do all that is sweeping. Yes, they can try, and absolutely, I'm not naive at all. People are fully aware that I'm, deep down the rabbit holes of their mechanisms, but it's not a foregone conclusion of how they can. It's mostly about corralling people, which is why I always give the example of they didn't come to your house and force you to have the Britney Spears. The people who had it walked to their, and gave their tacit consent. So similar thing. Most people, it's more work to create solutions and to look at it, whatever. And they know that most people, for what reasons, are not aware of that work to be done or tied up with other things. So I don't think they can completely wrap anything up. They never have and never will be able to. And it's almost like, Dan, the other aspect of, I had this conversation with people sometimes about China, because often we cite the Chinese social credit score system, which is horrific and is absolutely in place there. It's not everywhere in China.
No, it's not at all. No, it's
and
so
that's much, we can almost simplify these things. And I always like to remember what's going on the ground is sometimes a lot more nuanced. Well, not always a lot more nuanced than the kind of the headline, even in the alternative media, that this dystopian view that everyone in China is just not allowed to do anything, they're all locked down. Absolutely, in the worst cities, and it's really bad. But of course, there's the whole spectrum everywhere. So there are people, you could argue, we could say, oh, it's awful there. There are loads of people in China, in certain areas, living much more in tune with nature and much healthier lives than we are. But it's so easy to get kind of polarized and always this oversimplification and this lack of nuance and lack of really look what's happening on the ground. So there's a whole spectrum of things going across the world. It isn't this, that's where I view the future of, there will be dystopian pockets that some people have sleepwalked into and they've almost chosen it at some level. And there will be the other ones. There's going to be the full spectrum. So where do you place yourself and where are you working towards getting to? And yeah, absolutely. The kind of full dystopia idea is I view, almost impossible for them to achieve, because of the human spirit and spark and creation, and we react to those measures by finding better solutions.
Yeah. I mean, this is all so powerful, Sam. So there's so much to point. It is as much a philosophical conversation as it is a technological one. And I think there's so many things happening right now in the world that it does feel almost though with these emerging technologies we talked about, it's become like anything. Like we've got any major issue that's happening in the world right now, it feels like become deeply polarizing. You've got extreme views on every subject, and it's like that nuanced, kind of balanced, holistic view that encompasses the wider picture is so lacking in our culture right now. Yeah. And I'm already seeing with, say, blockchain, decentralized finance, you've got two camps of people that have emerged. You've got those who kind of have the really utopian view of its potential to disrupt the financial system and put the power back in the hands of the people, which is true. It does have the potential if there weren't other forces involved. But then you've got the other dystopian, the other end, that this will lead to one world government, one world currency, and mechanisms of control beyond our wildest imagination, which is also a potential. Both utopian and dystopian realities are indeed possible realms of imagination. But you have to also look at the competing forces within those utopian and dystopian realities, and that neither has won.
And I think that almost almost this oversimplification of we're going to have a win-lose situation, or it's going to be, and it just doesn't make any sense to me at any level, philosophically or practically, that anything plays out like that, because it's almost that's an end result, isn't it? End game, as if there's a day where victory is announced, and there will be victories and defeats and comings again on all sides. That's why I kind of view it. The powers that be currently will achieve some of their aims with certain types of ideas. Other people want freedom will achieve some of their aims. It's both and always going to be playing out and fluctuating and constantly shifting. So getting out of that arrival point and a kind of, it's almost the idea of wanting to get somewhere, whereas really this is life right now, and it's always going to be life right now, wherever we get to, and the problems will shift. It's almost like, if you got what you thought was the win, well, it's just a different set of problems. It's a different set of challenges. The challenges will always exist. It's like I always used to have this debate in my younger years of, do you want to be single or in a relationship? They both have, and I would argue, an equal amount of challenges, just different qualities to those challenges.
Yes.
It doesn't. Neither of these choices or where you end up is an end to challenge and growth and whatever. That's the kind of constant. And the idea that we reach somewhere where it's all sorted is like, well, is that what would be the point? What's our journey? So absolutely, Dan, that's why the bigger conversations, and I'm just, as you said that, I'm thinking, is that part of the problem of our age, is that the short-termism and the kind of sound bites and the kind of clips generation or really short attention span is not allowing the space for these conversations, which I love having. I know you love having, and when I get booked for a talk, I always say to them, can we have at least 3-4 hours? Not because I want to, go on about stuff, but because I know that we need the space to go to these areas. That I absolutely can't sum it up because, and I'm not trying to sum it up, but we need to have this angle brought in so it's holistic. And I think that kind of rushing around West Society, even from the awake point of view, is people find it hard to find the time, but it's so valuable, I think, to find this time to have these conversations because it is very grounding and can help us to get grounded and have a bigger view and not be so pulled around, and thinking, hang on, I haven't been able to get that. And so building that time in however we can is crucial.
Absolutely. Now, Sam, we've put together a couple of resources to help people understand some of the foundations that we've talked about today. We've got the Navigating Digital Assets course that you've put together, which really breaks down the fundamentals that we've drawn from today. We've expanded a great deal, but if you've come away from this conversation thinking, I need to get my head around this, the Navigating the Digital Assets program will help you with that. And we also touched upon the investment side of this, and how do you go beyond understanding into motion. And we've got the Navigating the Financial Reset program. By the time this episode is live, we'll be preparing for our first crypto cafe session on the Wednesday night, where we'll start to explore further how people can move into this space.
Yeah, so, because although I want to just say, although it's so expansive and people can feel overwhelmed, what I like to do in my trainings or any talks I give, or especially the cafe sessions, is shrink it down to really clear options. Yes. Because there are quite, as big as it is, there are really simple, very kind of simple steps you could take that may kind of help you reach your particular goal. Because you don't have to understand the whole of the crypto, because no one understands. I want to reassure people, no one understands it. Everyone's new. Yes. So even the tech guys who are right in it deep, it's so new and evolving. It's not that they could cover it all, and you don't have to. But often, I think if you can understand that there are certain simple ways, it might be just like, I literally just want to get myself some Bitcoin because I want to have an alternative, decentralized means of transaction. I want to get that myself custody. That's a very simple roadmap that can become more binary. Yes. And then, because I know I have clients like this who like that step, and they've got that clear. And then they feel they can learn freely the rest. Then they can relax because that was their goal. But then they're curious, and then they can go on the journey and listen without the pressure because they've achieved what they wanted to do practically. And then they can learn as they go and see what speaks to them or not, and go on the organic journey. So I don't want people to feel overwhelmed by this conversation.
No, of course. Oh, definitely. And it all comes back to what we shared on our first workshop session, which was understand where you are now and where you want to go, because you've made that perfectly clear. Once you actually narrow it down to what your specific goals are, that eliminates like 99% of the options, and it gives you the kind of more clear path forward. And I think that's whether you're talking about crypto or any other form of growth, it's the same.
Because being involved in crypto doesn't mean any one thing. That you can actually be involved in such a completely different way from somebody else. So that's what's really important to understand. And I think what people find helpful is I can shine a light really focused on certain areas and a roadmap to achieving that. And that is something that's really attainable. And obviously, as I experience and with clients or people who've done my course, or that really is attainable in a short amount of time with a little bit of focus and some effort on your part. That is not something you think I've got to spend the next 5 years getting through this and understanding it all. That is very doable in a real short time if you're focused.
Absolutely. So if you'd like to find out more about what we've just shared, you can go to weareelevate.org/reset, and you'll find out about both the Navigating the Digital Assets program and our Navigating the Financial Reset, where we have 2 calls per month. This next call is specifically on crypto, and our other calls are more widely looking at the broader conversation around the big picture. So, Sam, as always, this has been an insightful conversation. I said at the beginning, confusion and clarity. Let us know in the comments what end of the spectrum you're at after this conversation. I think your point, Sam, around the paradoxes is actually with moving from confusion into clarity will always create new confusion because you expand your knowledge. So
the more you know, the less you understand. But that's part of the journey.
Yes, and it's finding ways to relate things to And hopefully we've done that today in some of the examples we've shared, relating to things that we already know. That's the key with this new ecosystem is understanding how it relates to life as we know it. So as always, an important conversation. If you've enjoyed this, please let us know in the comments. Please share this conversation. You heard Sam mention the ISO 20022. If at that point you're like, what's he talking about? You may have missed episode 3, which was our last session where we actually broke down what that shift is. It's a shift in the financial technology that underpins the financial system, moving from SWIFT to this new regulation. So if you haven't seen that episode yet, you can go back and see that one. And as always, we'll be back again next Tuesday with our latest episode of the Uncharted Territory podcast.
And Dan, my last question before we sign off, are you going to drop the bomb next week then?
I am. Yeah, I'm going to hold that one because it's actually a very specific nuance around the decentralized nature of a lot of the way that this new ecosystem works. And when I got my head around the transparency of it, I was like, what? Like the visibility that comes with it is mind-blowing, counterbalance to the privacy. And I literally won't start the conversation because it's not. That is a fascinating.
I know. I think. Well, you've given me a hint at the bottom of the paradox. Yeah. Of that is so let's have another week.
Yeah,
come back to it.
It's one of those things. When I first heard it, I was like, "Hang on." So yeah, we'll bring that on another conversation.
Well, I look forward to it, mate. Look forward to it.
Yeah. So okay, for now, Dan and Sam signing out the Uncharted Territory podcast, episode 4. Look out for our next one next Tuesday. And again, if you'd like further support and information on your journey, head over to weareelevate.org/reset. And we'll see you on our very next episode.